I'll step back to the latter part of last year, and we had some discussions with lawyers and other agents, and we were all concerned as to what was going to happen in 2013. 2012, the latter part was great, but people were saying, what's going to happen next year, where the deal's going to be, where's the interest going to come from? And we've all been proved completely wrong because the activity's increased, and there's more demand than ever for prime retail, prime office stock. And I forecast by the end of Q2 will be, the volumes certainly will be, currently there's in Poland, there's €1 billion on offices under process at the moment, or in the market and actively being negotiated. €1 billion in retail, which is going through due diligence and active. So I can see that volumes overall will be potentially, assuming some of these deals do actually go through, will be up on last year. Maybe I'm being over-optimistic, but I can see it being an increase on last year. And the demand is there. The demand, again, though, is always focusing on the prime end of the market. So that same polarization which everyone hears about, a lot of weight of equity chasing prime. We'll probably talk later on the other end of the market, which has softened, though. But prime is strong, and demand is going to continue.
Okay, good, thank you. And in terms of the industrial logistics sector, Ben, are you seeing that as well? Continued interest, continued deal flow, more development? What are you seeing?
Yeah, I mean, a very good barometer was actually Tuesday night in Warsaw. There was the CEE Quality Awards, and there were 600 people there, which is a fairly phenomenal turnout. And I think probably 50% of those had travelled from either elsewhere within the CEE or indeed Germany and the UK. So the investor, and the majority of those were actually investors. So the demand is certainly, or the interest is certainly there. From a logistics perspective, we saw some big deals done at the end of last year with Blackstone, with Hines. Blackstone again, first quarter this year. I think it closed first quarter this year. Yeah. So there was two portfolios, one at the end of last year, one at the beginning of this year. As Jos alluded to earlier, also, if you strip out just the Central European piece of the Norgis deal with Prologis, that in itself is a 530 million euro portfolio. So huge amount of interest in the sector. Problems being lack of product or lack of good product. And I think that's probably the only thing that will temper the amount of activity this year.
Okay, good.
Yeah, because we, from our side, we're exactly the same. We feel that great demand for logistics, but just scarcity of stock, lack of stock. The main developers tend not to exit from some of that stock, so it's just there's very few opportunities there. So I think volumes this year on logistics will actually be down on last year because last year was so strong. But it's really it's lack of product is a problem.
Well, I think Josh had some interesting observations about the new normal and this idea that base rates are going to stay low long, and the spread that's available in CEE particularly is, I think, driving what we've seen in Q1. We were surprised with the performance in the Czech Republic in Q1, where there were half a dozen deals that closed. Some of those hangovers from 2012, deals are taking longer to get done. They're being initiated 6 to 9 months before closing. And so, Czech had been a little bit out of favor in 2012. So there's an example, I think, of people wanting more allocation to a country that's connected to the German supply chain. So I think when you look at the region, Polish is a domestically driven demand, whereas Czech and Hungary tend to be more German supply chain driven. So if Germany continues to recover, it's interesting to see the GDP numbers. And I think, along with Russia, I think even Germany is starting to moderate some. So I think the region is driven, primarily by export, other than Poland. So as long as the global macro and, say, European macro picture stays strong, I think 2013 will be a good year, and I think you're seeing a lot of source of funds that want allocation to CEE. I think what's interesting, I heard it said that CEE is like the new Iberia because of the distress in the periphery, Portugal, Spain, and you can throw Italy in that bucket. People that used to have and allocation in Europe for those countries have shifted their allocation to CEE, and I think we're just on the beginning of that wave, really.